Sameer Narayan now joins us. Now he's been vocal, he's been bearish, he's been raising his concerns about what the concerns are. But Sameer, where is your Bhavishya if I may use the word, in terms of where the economy is headed has come true. But right now, are we in that phase of the market where economy may do poorly, but markets will do better?
Well, Nikunj, I tend to agree with you, at least in the short term, because I think the price impact and the damage has been probably more severe on the current earnings basis. Now, if you've seen, we've already been through, say, 3/4 of the earnings season. People have already downgraded their earnings estimates on FY20 from, say, about 24% earnings growth to about 17-18. So in the first quarter itself, you're seeing that earnings have been marked down 15-20% on the entire year basis. Now, that means that pretty much expectations have come down to virtually ground zero. Now, let us see what is happening on the reality side. The RBI has clearly changed their stance from deficit liquidity to surplus since June. You're seeing that reflect in the yields. And I think the fact that so much of money has been pumped into the system, close to about 2.5 lakh crores, I think that would start showing and playing out over a period of time. So say, come maybe December end, you will start seeing that some amount of credit growth pickup hopefully will start happening. Some amount of consumption will start picking up. Because I think we've seen from the earnings for the June quarter as well, FMCG by and large, which are basically low involvement, low ticket purchases, there you're not seeing such a big impact. But it is actually the discretionary which has completely bore the brunt. And I think there also the monsoon has had probably good tidings over the last fortnight, and that augurs well for the sentiment. So there's no cause for being completely bearish and having a doomsday scenario. I think what one needs to see is that from now on, yes, the economy will come back into the repair mode. So whether are we completely behind the turn, we have to look for signals like the credit growth pickup. And once those starts falling in place, the market should start getting confidence and start trending.
Sameer, the real worry is FIs are selling. But how come nobody is talking about what DIs are doing, DIs are buying? On a daily basis, if you really look at the FI number, sell number versus DI buy number, the difference is not large. I mean, it's not like DIs are also selling right now. By and large, if I equate the DI selling versus DFI selling versus DI buying in the month of July, the mismatch is not large. So, bhai, bech kaun raha hai fir?
Nikunj, I think this is a very difficult question. The problem is that we've seen this trend not only in the last month or so post-budget, but we've seen it over the last year and a half, that the sale figure has almost always been matched with the buy figure of the locals. But the problem is that now after the new categorization of the schemes and the sectors, the stocks, you are having a situation that most people or running a large cap fund category are owning the same 100 stocks, or probably a majority of the holdings across the board are same. So now, unfortunately, those are the same names that FI also hold in large numbers. Now, I think this whole taxation issue, the real impact may not be too large, but I think what the government is sensitive about is that today we need to look at avenues of increasing savings rather than increasing consumption, because consumption stimulus will obviously have fiscal impact, but a savings growth is something that can probably lead to a larger longer term outcome. Now, in that sense, if you have to look at how do you now ensure that without disturbing the fisc, you try and get some sort of an asset sale going so that you can raise funds to deploy in more asset creation where you will have job growth, etc. Now, for that, you need a buoyant market. I think the government is sensitive to the fact that today, where there's a crisis of confidence, you just can't do any amount of the divestment program that you've lined up. And 1.05 lakh crores is not a small number. So I think government also understands that there needs to be optimism, but it need not be completely a bravado. But at the same time, you do not go the entire pendulum on the other side as well. So there needs to be a balance, and that's what I think the attempt is to bring about.
Okay, Sameer, why are paint companies selling?
Because actually, it's also a quasi-consumption play. Because if you look at in India, we had the situation when the entire do-it-yourself market and the fact that there was a lot of optimism on the housing. I think that was what led to paint companies were seen as very good proxies, because they also gave you the cost advantage of a rising or falling crude. So there you could very clearly get an estimate that in case the crude markets are in a bearish phase, then the cost will completely play in your favor, and then you don't need to knock down your retail prices that much. So there was a tacit pricing power that sector was giving investors to play on. But I think what happened in the bargain was that valuations reached such a zone that now one is wondering that even a 20% kind of a growth, will it be sustained? So today those questions are being asked, and I think that is not only true for paints, it is being true for probably...
My question is simple. Why are paint companies reporting strong volume growth? Housing is in a downturn, auto is in a downturn, there are monsoons, there is a feel-good factor which is missing. You paint your house or you repaint your house when you feel happy, excited, or when you have disposable income. The consumer is shying away from buying simple things like Colgate toothpaste and Patanjali products. Why are paint companies in this kind of an environment reporting strong numbers? Because that's a disposable category. That's a category which will only do well when you're feeling excited about things.
It is easier for a household to make a decision of redoing their home rather than buy another house. I think that's the simplistic argument. That, I may not have the purse or the availability to go in and buy a big house, but I can definitely do up my...
The current
exactly.
His husband speaking how he convinces his wife.
So I think that is buyer behavior for you, especially in tough times. But having said that, I think paint companies also, one needs to look at that what we saw in two-wheelers, that initially we could see that there is buyer behavior has definitely changed, but the primary sales was still pulling on. So there might be a lot of dealer inventories also sitting there. So one needs to see this over the next 3-quarter kind of. So if you look at any FMCG or for that matter, any consumer facing businesses, one should always look at the rolling 12-month sales, because YOY may not be a very apt example. So I think that is what will then show you the real number, that it is quite likely that the behavior of not doing up a house versus buying a new one, that is one. And second, there's also an element of today these companies have really used technology in a big way. I mean, today, the earlier getting a house painted used to be a huge task. But today, the way the companies like Asian Paints have come up with technology solutions for the retail customer, it makes it superbly convenient. So I think that is one segment of the market that today has become more, from a unbranded category has become more branded. So to that extent, the multiples should go up. So I think that is what perhaps the story is.
Fair point. Aside of that, Sameer, it's not just the paint segment, but even a Dabur, a Bata, a Nestle, even yesterday's Pidilite's numbers, they all have surprised. I mean, you could only draw a conclusion that even within this slowdown, there are those companies which have been beneficiaries and they've stood out.
You're right. I think the reasoning for that could be that these are low value, low ticket and more repetitive purchase items where the impact of a slowdown will probably come at the last leg. So that's the reason why the volume growth is still holding up. But the moment you go down to slightly more high value, high involvement purchases like a discretionary, that's where you've clearly seen the whole impact. So maybe it could be for another quarter, because then you will also have the monsoon flavor coming in. So FMCG may still hold up on the volume side for maybe a couple of quarters more. But having said that, the moment you start seeing government putting some, after this Kashmir resolution, I think one big thing that one needs to see is that you need to now go and put in, infrastructure investment, really step up the pedal in that part of the geography of the country. So I think that's where you'll start seeing, the optimism on industrials and the order book growth, etc. could then, one start unraveling that.
Like a touch of green and pre-open this morning as well. Let's take a look at some of those nifty earnings that we'll be watching out for, the names that will be in focus today. And a whole host of pharma names as well. Sameer Cipla, of course, the big one there. But I think we're also watching out for Lupin, Aurobindo, and a whole host of different factors at play, of course. Any of them that you're going to be tracking earnings? Any of them that's you're not too keen on pharma right now?
I think right now the sector is seeing some amount of flow coming in for the simple reason that the rupee is now depreciating quite hard. So people think that there will be some amount of positive impact on the export side of the earning. And maybe because these stocks have low ownership and they've had a massive price correction. So one would hope that in case there is a bounce, then one would want to play there. That, you're not likely to see further price correction of price damage because ownership is not that high. So I think it's probably a high trade to my mind. I don't think there's any great earnings thesis. But yes, to get confidence on what is actually happening on the sector, one would probably need to watch out for a couple of things, because now the way the government is looking at putting a price line on all the sort of expensive drugs and things like that, and the fact that the Jan Aushadhi Yojana So how does the whole regulated genericization of the Indian domestic formulation market, how is that playing out? How are companies reacting to it? So that is something that one would like to watch, because that's also one significant portion of the earnings, because export growth is there, but domestic market still remains quite a significant one.
Okay, another stock which is going to be in focus is going to be Avenue Supermart, perhaps, because RK Damani is looking to sell that 1% in D-Mart, and this is for nothing but to meet the shareholding norms, which were altered just a short while back. A low float stock, but it's only 1%, Sameer, and again, it's debatable at 1470. Would you buy the stock or not because of the expensive valuation?
Aisha, in certain cases, you don't buy on a pure multiple basis. You look at a franchise and you see as to, can I see this business evolve and scale over the next 5-10 years? Like, for classic example, as Nikunj mentioned, Trend. I mean, these are franchises that you only get to buy at, say, certain times. Otherwise, every time somebody wants to take a significant large exposure to D-Mart, because it is such a thinly traded stock, you will typically cause a very large impact. So today, when there is an opportunity because of a regulatory situation that you are getting a large block available, I'm sure people would be wanting more to evaluate entry rather than look at valuation or multiples.
It's that one opportunity, don't miss it.
Absolutely.
Fair point.
All right.
Sameer, a 25 bips hike or rather rate cut by the RBI is something that just about everyone on the street is talking about. Seems like that's well in the price then. What would surprise the market on the upside? What kind of commentary, what kind of rate cut?
Aisha, I think 25 bips is pretty much expected and in the price. But if RBI has to do the heavy lifting to spur growth, I think the problem is that they need to be confident about the fisc. Now, if you see in the first quarter of the current fiscal, you've seen a tax revenue buoyancy of only about, the growth is 6.7%. Now, the expectation for the year is 25%. So you are actually way behind the mark on that. So RBI would obviously be mindful of that. So I think what they've done in their as a response is they've clearly shifted the liquidity stance. So liquidity has gone from being deficit to a decent surplus. Now, they are also mindful of the fact that the rains have been good over the last fortnight, but they've been very heavy. So it has been, the spatial distribution is perhaps not as good as one would have liked to.